Joining us is Colin Mason, Principal Broker with the Mortgage Domain. Colin, welcome back to On the Market.
Thank you for having me.
Your phone's probably blowing off the hook after last week's rate announcement. Tell us a little bit about what this means to the consumer.
Well, to the consumer, it's particularly those that pay or sign into this station on a regular basis. They know that we had been predicting another half a point increase. It's not the end, according to your and my sort of projection as to what's going to happen. You and I had said we expected to see a little bit more of an increase over the next into the early Q1 of 2023. So it's right on track for what we had predicted. Some good silver lining. I'm always an optimist, so it wasn't a 0.75% increase. It was a 0.5% increase. So it seems to be we're on the right side of that equation. I'm expecting that there is even a mention that they may even give it a little bit of a break to see how this is going to impact inflation. So that's a positive thing as well to take into consideration moving into the new year.
And Colin, what are you hearing from your clients, your customers, in terms of those who are holding a mortgage? What are they connecting with you about?
Well, a lot of people are concerned or questioning how the rate increases are going to impact them. As we've mentioned on this show in the past, the impact is more for those that are holding variable rate mortgages. So the variable rate mortgage is when you hear about the increases, they're the ones that are actually seeing it in their bank book. So this is definitely good news for those that are hoping that they're going to weather the storm and hoping that they are on the right side of it. So, but it has been a rough last 6 to 8 months. Many people have seen their interest or their mortgage payments. I spoke to a lady the other day. She worked it out. She said it has literally tripled. So if people are able to hang on, that is definitely something that I think they're going to start to see a little bit of a relief moving into the new year. I'm hoping anyway. Those that chose the fixed rate mortgages are not impacted, obviously, because their rates have stayed the same. Particularly those that locked in early last year and took advantage of the really low interest rates. They've got another 4 years to go. So by that time, they may find themselves in a situation where likely they will renew at a higher rate, but I think that we should be well past the really high rates at that point, and maybe something that's a little bit more reasonable.
Colin, we're hearing rumors or chatter about mortgage brokers having access to monoline lenders that may have competitive rates compared to financial institutions or traditional financial institutions. What does that mean, and what's a monoline lender?
So that's a great question. So monoline lenders are lenders in mortgage providers, mortgage lending companies that are providing just mortgage products. So typically they don't offer lines of credits, credit cards, savings accounts, those types of things. Some monoline, they're not really monoline lenders at that point, but it's alternatives to the big chartered banks. Now, the all banks, chartered banks, the Schedule A banks, they offer a lot of value. So, somebody's saying, well, why would I ever go with a bank? Well, there's many reasons why a bank is a choice for people. And that's when we sit down with a client and go through all of their options. So a monoline lender being one that just provides mortgage financing. They typically don't have bank accounts and that kind of thing. So you would stay with your current bank, and then your mortgage payments would come out of that bank account where you do your daily banking, and then you pay your mortgage company. But some people prefer to have all their products all in one. So there's value on both sides. So definitely it's a making the products and determining what financial institution is the right one for the borrower. One reason why a monoline lender is tends to be the choice of a lot of people is particularly those that are rate sensitive and want to save as much money as they possibly can, which is most people. because they don't have a lot of the additional costs and infrastructure costs that these large banks have, they are able to pass on those savings through their interest rates. And you typically see monoline lenders offering lower interest rates than what is offered to through the larger chartered banks.
Okay, so I'm going to put you on the spot here then, Colin, because you hear that line, if it's too good to be true, it probably is. So what advice do you have for listeners who are hesitant about that monoline lender? How do they know they can trust these businesses, these institutions?
So many of them are backed by large financial institutions. So monoline lenders are very reputable organizations. We would never deal, as mortgage brokers, we would never deal with a lender that is not going to be a reputable lender. So particularly on the A side, it's heavily regulated. You just can't get you can get small companies that join in and into the market, and they are maybe not the best out there in terms of what their products and service and so on. That's where we come in to help vet the monoline lenders to determine what the best fit for the client is. But all monoline lenders follow all the same regulatory requirements that the banks have to, and it's they're heavily regulated and good options for clients to consider. Again, it's all about for us, it's all about sitting down with a client and figuring out what they need and determining whether a monoline lender is a good choice for them. But there's many of them out there, and we're starting to see a lot of clients, like particularly clients that are coming up for renewal, and we ask what financial institution they're with, and they say, oh, well, we are with a particular lender that's a monoline lender that's outside of the chartered banks. So it means to me we're seeing a lot more of that, which means that a lot of clients are considering monoline lenders moving forward. So combined with the savings and the other option or the other benefits of going along with them, it's definitely something that you should be asking your mortgage broker about.
Colin, before the whole pandemic free money type of deal that people had out there, we were used to seeing rates around the 4.5%, 5%, 6% mark. Is that going to be the normal moving forward? And what do you anticipate the rates settling in at after the Bank of Canada has completed their process of trying to get inflation under control?
Yeah, I think what we saw with the whole pandemic and the stimulus that was provided to borrowers in order to help get us through all of that, we saw unprecedented rates, very low interest rates. I've been in the industry for well over 25 years. It's that long. I actually can't figure out how long I've been in it. And I've seen rates low before. We've seen very high interest rates, but never in my career have we seen rates that low. And I've been telling clients, and I told them at the time, if you can get a rate in the high ones, I can't believe I'm even saying that, but high ones or low 2% rates, anybody that took those rates at that time are definitely going to benefit over the next for the balance of the term. But I think realistically, high threes might even be a little bit optimistic. I think that you more realistically, low fours into the high fives, I think is where we're going to be. And quite frankly, that's not a bad interest rate realm. If you look at the whole spectrum of interest rates over a long period of time, you'll see that that's among the lowest rates that the mortgage industry has provided over a history.
Always great information, Colin. If our listeners want to connect with you, how can they find you?
The best way is I always provide my cell phone. They can call or text me directly there. It's 416-676-6777. Or our office is 416-410-0900. And there's extensions you can follow.
Colin, thanks so much for joining us. Have a Merry Christmas, and we look forward to talking to you in the new year.
Thank you. You too.